S&P Global. Platts now joining us, Mr. Tan, Senior Managing Editor, Steel and Raw Material at S&P Global Platts, and he is joining us live from one of the Platts conferences that's going on in India. Thank you so much for taking out time for us. Can you just talk to us about the steel prices, what has happened in the metals pack in the last few days? Is it pointing out that the cyclicality is now reversing on the downside?
Hi, good afternoon, and well, you're very much right in that we are seeing suddenly a bout of softness in steel prices, be it in the long sector, if you're looking at flat steel products, or in the longs, talking about rebar, TMT rebar. So Chinese steel prices, that's really led by what's going on in China. So we've seen Chinese steel prices slump over the past couple of weeks. So there's a mixture of what's going on here. So part of it would likely be related to the seasonal effect. So we are seeing winter kick in China, and typically we see construction activity slow down there. But at the same time, on the flat steel side, we are also seeing some signs of weakness in demand growth. So for example, if you look at auto production, I think we've seen figures for Chinese production post negative growth for the first time since the 1990s, and that's pretty chilling if you were to ask me. On the white goods segment, so if you talk about fridges, if you talk about washing machines, air conditioners, that's also been an area where we've seen consumers slow down a bit there. So there is growth still, but not at such a strong pace as we have seen previously.
All right, just want to understand how are you reading into the changes in China's winter cut production policy, where they're giving more freedom to individual provinces. We understand the output has also stayed strong because of that.
Well, you're very right. So this year's production cut plans, or what we call the winter production cut plans, there's a bit more differentiation this time compared with last year. So where we had a blanket order to cut production by 30 or 50% last year, this year mills or steel companies, they would be assessed based on their level of compliance to the emissions reduction standards. So if you are a totally compliant mill, a steelmaker, then you wouldn't actually need to cut any production. But if you have yet to install facilities to deal with emissions, then you would have to cut productions by as much as 70%. So it's now like a gradation. So we see like either 0% up to 30%, 50%, or 70%. But what I can say here is that in China over the past year, many of the steel companies have taken the chance to install emissions facilities to deal with emissions. So in reality, we're not going to see the same extent of production cuts as we've seen last year. And this is perhaps also the reason why steel prices have not really picked up, even though we've entered officially the winter season. So winter in China will be defined by a start of November 15th. That's a few days ago. Steel prices still hasn't been picking up. So I suspect it's something to do more with the demand side of the picture. So that, being perhaps, you can relate it in part perhaps to consumer sentiment being weakened by what's going on in terms of the trade wars that's been with the US.
But what is the sense you get about demand? Do you think if prices keep on correcting like this, soon there will be a fear of what's happening with the global capacities, what's happening with the global growth? Is there so much demand that is needed at this point of time?
Well, if you're talking about China alone, clearly demand itself has been growing at a very fast pace over the past couple of decades. But it has to kind of start to taper out somewhat, right? So there is still growth that we are seeing, but it's just at a slower pace. But thanks to the supply side reforms that we've seen being carried out in China. So they have reduced a lot of capacity, especially those that were operating in inefficient terms, or if they were environmentally not very compliant. Those were forced to shut down. And what the impact of that has been is that the remaining mainstream steel makers now have greater pricing power. So when they make offers to the market, they're not always undercut by illegal producers or producers that have not been given a permit. And maybe if those that do not issue tax invoices. If you talk about outside of China, the demand picture has also somewhat been quite, lukewarm, I would say. Perhaps again, there might be efforts to link this to the ongoing trade war with the US, or perhaps the Section 232 tariffs of 25% tariffs. So I would say, if you were to think about the countries that have been affected, or regions that have been affected, Vietnam clearly comes to mind. Vietnam buys a lot of hot rolled coil. They re-roll it to become galvanized products, so coated steel, right? That goes into making white goods. You can also use it for construction, some light construction activities. There has been a tremendous growth in capacity in Vietnam for such facilities over the past couple of years, and we're now seeing perhaps things coming to a head when, especially with the US tariffs being applied across the board.
What do you make of the recent M&As that have happened? In India we've seen a lot of assets which have come, and big players like Tata Steel, ArcelorMittal, a lot of players have shown a big interest for assets even globally. Can you just tell us, you expect the M&A trend to be high and cost of assets to improve?
Well, the M&As that have been taking place are probably something that has been, something that many people in India have been expecting for a while now. Given the low profitability in the past few years, it's something that would be, helping the industry consolidate finally. So in terms of the sales of steel products and the product mix, I think there will be a greater level of coordination between the companies that are being acquired. Efficiencies will be improved, as well as in terms of raw material competitiveness, given the rupee's weakness of late. I think when companies become more joined up in terms of their raw material procurement, we're talking about things like metallurgical coal here, especially because India is clearly very reliant on imports for that. They will probably have a greater bargaining power. But the thing is, with these M&As that are taking place, we probably won't see an immediate impact or the benefits of these taking place so soon. This morning, while at the Platts conference that we are at today, we have officials from various steel companies on stage. What they think is that perhaps we will be able to see these synergies come about maybe in a couple of years, maybe in 3 years or so.
It was a pleasure chatting with you and getting to understand the demand scenario that's panning out. Thank you so much.